Hello, today is the 15th of May 2011. Welcome to today's Silver Log and what will be the gold and silver ratio on many different time frames, starting off with the quarterly chart. Each one of these candles representing 3 months worth of data going back to the second quarter of 1998. Each one of these charts will contain 50 periods or 50 candles, the 18 period of averages, the high, the low, and the closes, and the significant Fibonacci 38.2 and 61.8% from the last 67 periods. Okay, let's get started. What do we see here? It was very choppy beforehand in this range. Went above this average, was not able to find support here. Found resistance, and then again here, not quite got above it, still was not able to clarify a trend. Now we are again starting a new one. Every single trend has failed on this particular chart because, like I say, it didn't go up higher from here, it didn't go down lower from here. The breakdown has came below this significant level, so more than anything, it has really broken out of this sideways consolidation. Oftentimes, when you're in a range like this, when you break down, you come back to previous support for resistance, and that would be the 40.44 area. Ignore this dollar sign because I didn't want to take that out because this is the only thing that I've tracked that is not priced in fiat currency. After the quarterly chart would be the monthly, and or weekly actually is what I got next. And on the weekly chart, it is bearish and cautious. Why is it bearish? It's because it's got a declining 18 period set of averages, and it is still below this significant Fibonacci level. The reason why it's cautious is because it's at an area of resistance, and if it can manage to break above and hold above this significant area, the trend would change to at least neutral, and I think even getting above here would take it to that of bullish. A lot of times when you have that area of previous support to become resistance. Now this area wasn't really support, but it is a significant Fibonacci level. It was one of those charts that really was one of the ones, if it didn't scare you out, it wore you out, and it's managed to get a total of, let's see, 1, 2, 3, 4, 5, 6, really about 2 months worth of losses back in this particular week in here. And because, of course, that it's on a declining moving average, it's not bullish unless you move it out to the shorter term time frame. Say the daily chart, where the daily chart, this market is bullish. Because it's above the 18 period average of highs, lows, and closes. And you can notice here the size of these compared to this in here. That's because of extra volatility. And of course, it's been rampant. The support has been found in here. We've now consolidating, trying to find support at this 42 level. Definitely get a little cautious if it breaks below the 42 handle. If it does, you'd be looking at a test most likely of this little area in here, wherever these moving averages happen to be, when of course it happens to move lower. But overall, it's making a pattern of higher highs and higher lows in here. Finally, the last one is the hourly chart. And this only spans the last 3 days or so. But in here, we're seeing a pattern of lower highs and a pattern of lower lows. As far as the sentiment's concerned, it is now newly bearish. After all, it was bullish in here, then it moved into neutrality, and now here's your breakdown pattern. In fact, if anything, this is one of the spots where you're seeing here, okay, this is now looking as if this area was resistance, because it was supposed to be support in here, and it pretty much was, but it was more resistance more than anything. It was not able to break higher, and it had the resistance pull, and now this is the first test of this declining moving average market, of course, looking to head towards the downside. I think a significant support level would be roughly here around 41 and 3/4. If it breaks below that, then you're heading down towards 41 and a quarter. Thank you for watching and have yourself a great day. Bye bye.